Lesson number 26, Closing. Hello guys, kumusta mga kaibigan? In this lesson, we are going to learn what is closing? What accounts do we close? What happens after we close the accounts? What are the steps performed during closing? After preparing the financial statements, we can now perform closing. What is closing? Closing is preparing the books, journals, and ledgers for the next month. By the way, a journal is also called the book of original entry because it is where we record a transaction first. Ledger is called the book of final entry. Closing involves transferring the balances of income, expense, and owner's withdrawal accounts to the owner's capital account. Next month, we can start recording income, expense, and withdrawals again. Asset accounts, liability accounts, owner's capital account are called real accounts. The real accounts are not closed. Income accounts, expense accounts are called nominal accounts. Together with owner's withdrawal account, these accounts are closed. During closing, the balances of income accounts, expense accounts, and owner's withdrawal account are transferred to the owner's capital account. What happens after we close the accounts? After closing, all income accounts will have a zero balance. All expense accounts will have a zero balance. The owner's withdrawal account will have a zero balance. All their balances will be transferred to the owner's capital account. The balance of owner's capital at the end of the month is the balance of owner's equity. Let us use Jack IT Consulting Services adjusted trial balance to show you how closing is performed. Again, we are going to close Jack withdrawals and all income and expense accounts. To close income and expense accounts, we are going to use the income and expense summary account. To close the income account, we are going to debit IT consulting revenue, 25,000 pesos, and credit income and expense summary, 25,000 pesos. When we debit IT consulting revenue, or any income account for that matter, we are reducing the account, reducing the balance of the account. To close the expense accounts, we are going to debit income and expense summary account for 14,100 and credit all the expense accounts. Utilities expense 7,000, supplies expense 3,500, rent expense 1,000, depreciation expense 100, and taxes and licenses 2,500. When we credit these expense accounts, we are reducing their balances. Next step, close the income and expense summary account. At this point, the balance of the income and expense summary account is 10,900, a credit for 25,000 pesos minus a debit for 14,100. The journal entry is a debit to income and expense summary 10,900 and credit Jack Capital 10,900. Actually, 10,900 is the net income. The last step in closing is to close the withdrawal account. To close the withdrawal account, we debit Jack Capital 1,000 and credit Jack Withdrawals 1,000. After closing, the balance of all income accounts, 0. The balance of all expense accounts, is 0, the balance of Jack withdrawal account is 0 because all their balances have been transferred to Jack capital account. Just like adjusting, closing are also analyzed, journalized as closing entries, posted, and a post-closing trial balance is prepared.